So with respect to the performance in 2021, total income for TTNGL was recorded at just around 213 million TT dollars. This compared to just around 46 million in 2020. This improvement, as you know, is really a result of what would have occurred at PPGPL, and it's simply a matter of PPGPL's TTNGL share of profit from PPGPL, and that share is 39%, as we all know, based on our shareholding. There was a significant reversal in the impairment review exercise for 2021. We would have recognized an amount of 302.1 million as a reversal versus an impairment of 38.1 million in 2020. This is a significant number because what is really talked to is really the future of PPGPL and TTNGL in the context of what we have moving forward. The exercise is really around taking all the inputs for TTNGL, for PPGPL, sorry. That would include gas inlets, product prices, gas quality, looking at PPGPL's plans with respect to expanding its business from a growth perspective, looking at over a period of 10 years, applying a discount rate and assessing what is that value in use for PPGPL, for TTNGL's investment in PPGPL. And in 2020, what we had recognized in terms of value in use above the book value was 302 million. And that essentially talks to, again, the future and the outlook for PPGPL as we move forward. When we combine the total income and the impairment reversal, we have a number of profit for the year of 512 million approximately. Essentially, the end result is total comprehensive income, including exchange translation difference, of just around 514 million TT dollars, compared to a very small 6 million that we recognize in 2020. If we back out the impact of the impairment reversal and expense for the two comparative years, what we have is still a significant improvement year on year, moving from 28 cents in 2020 to $1.38 in 2021. Net assets would have grown as well, moving from 3.2 billion in 2020 to 3.7 billion in 2021. And that is again a direct result of all that we just discussed, the total income from the base operating PPGPL business, as well as the impact of the impairment reversal in 2021. So what are some of the drivers behind the performance at PPGPL that inevitably would have caused the improvement at TTNGL? Essentially, a market that was stretched from a supply perspective, with demand far outweighing supply, resulting in not only higher prices on the Mont Belvieu side for NGLs, but all essential commodity prices in 2021. Coupled with this, in terms of efficiency, we would have had a 7.7% higher gas volume going into Phoenix Park for processing. That is important because, as you all know, the more important segment from a margin contribution perspective for PPGPL is the gas processing segment. And that essentially is really a summary of where we are and where we were with respect to 2021, just to give a snapshot of that performance. Now, all of this is predicated on, as you know, where Phoenix Park, what levels Phoenix Park operate on moving forward. TTNGL goes where PPGPL goes. Our source of income is solely and primarily income from PPGPL through recognition of its share of profit as well as the dividend stream. So what happens at Phoenix Park is essentially key in how this business moves forward.